Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some or hopefully a lot of money on the internet. Loaded up for discussion today. We have Strategy announcing a $2.5 million new perpetual preferred shares called Stride to buy more Bitcoin. 2.5 million new shares. Sorry, not 2.5 million. 2.5 million new shares. On a perpetual basis. Excited to hear Legendary break that down. We've got Hype outperforming other majors. When I wrote this, it was up 12%. Now it's up 15%, pushing towards $37, $38, I believe. Binance US announced spot listing coming soon. We'll talk about that as well today. And we've got Tether announcing tokenized gold on the blockchain with Telegram. It's backed one-to-one with gold. So be interested to get those pieces of news, as well as discussing the rest of the market as usual. Delighted to say, got Legendary, Rahim, and Stats in the co-host seats with me today. Looking forward to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky. We don't know anything for sure, so please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Tuesday. It's the 3rd of June. How you doing?
Jim, doing quite well. Excited for the full house. As I said, I'm very happy that we now have multiple full houses a week. So I am here for the show. I'm here for it.
Good stuff. Good stuff. Rahim, how are things your side? Don't think we've spoken much this week. Everything good on your side?
So far, so good, sir. It's been nice. My sleep schedules are getting wackier by the day, and every day I see legendaries like Stats, and I'm like, oh my god, like I'm like literally like the opposite. But it's been good. To be honest, I'm enjoying it. I've been busy with work a lot. I've been studying up, reading a lot, educating myself. So it's good. I'm happy with this unhealthy balance for a brief period. So it's all good.
Is it drugs or degeneracy, Rahim? One of those two is keeping you up. I know it ain't. I know it ain't your wife.
Or a little bit of both.
Just kidding. It might be your wife. I have no idea.
I'm not married, so you're good.
Oh, perfect. Definitely not your wife then.
Stats, how are things your side? What's going on with you?
Things are good, man. Things are good. Yeah, I'm close to Legendary, and I'm still on my no coffee kick. So it's been 2 weeks now, no coffee. So I'm sleeping a little bit more. And yeah, it's beautiful in the mountains right now. It's just, we got the streams going because the snow kind of turns into streams and it all dries up by August, July. But right now it's just lush and awesome. So can't complain.
Very nice. Been playing a little bit of golf as well, I hear.
Yeah, I live about a mile from our golf course, and yeah, I mean it's only open 4 months a year, and we're out of town for 2 of those months. But right now we got a little window here where we're playing a little bit of golf. When the kids get home from school, I'll take one of them over there, and it's a good time.
Very fun. Ledge, did you want to say something?
Yeah, Stats, do you still notice the effect of not drinking coffee, or has your body got used to it?
I do. Yeah, I do. I mean, it's harder to rally in the morning. Not gonna lie, like there's definitely that. But yeah, and I think the benefits are there too. So it's definitely. But I was never like fully addicted. It just I'm just not getting those morning kicks, but I'm also not getting the afternoon volatility.
I was going to make some metaphor segue to the market as well when you said not rallying in the morning, talking about volatility, but you kind of did it for me. Without the coffee, let's get into the markets, which are rallying this morning, at least if you're a hype holder. Let's get you up to speed as usual, starting with the majors. We've got Bitcoin, which is flat at 105K. We've got ETH up 5%, but every time ETH is up or down like a reasonable amount, it's still just like 2.5 or 2.6K. So I'm not super excited about that, even though it says plus 5% at the moment on CoinGecko. XRP is up a couple of percent to $2.20. BNB is up a couple of percent to $666. Solana's up almost 5% to 160. As I mentioned, though, Hype is up almost 15% to almost $38. So that's the big move overnight. It's just flipped Sui again. Those two are kind of going back and forth a little bit at the moment as the 13th and 14th most valuable coins. Sui's just up a couple of percent to $3.30. Getting onto the meme coin side of things, we have Doge up around 3%. Pepe's up almost 10%. Again, when ETH is up a little bit, Pepe's always up a little bit more. Trump is up a couple of percent. Bonk's up 6%. Fartcoin is up 5%. but down as low as $1.10 now. Remember that went as high as 160 not so long ago. SPX, Murad's coin's up 11. Pengu's up 7. Trying to look for any other interesting trends here. Popcat's up 15. Mog's up 11. Again, a prominent ETH meme coin. Peanuts up 10. And a bunch of other things up. It was generally a green day across the board, including on the meme side. On the Hyperliquid meme side is up 42%. So, when hype is moving up, the Hyperliquid smaller coins are putting in bigger moves. That's something to note. Getting into the headlines themselves, we've got Strategy announcing 2.5 million new perpetual preferred shares called Stride to buy more Bitcoin. We've got Hype outperforming other majors, up 12% to 15, now up to almost $38. And the news may be related to that in some way is Binance US announced spot listing is coming soon. Sorry, I got a bit of a hay fever. Tether announces tokenized gold on the blockchain also. So we'll touch on that a little bit later as well. In terms of notable price action, we've got that, I can't remember the full name of the KTA token.
Kita.
We took Kita. It's up another 7%, pushed past $1 billion yesterday. We spoke about that chain yesterday. Up only chart as things stand. Launchcoin's up another 16% to 150 mil. That's obviously much lower than what it was not so long ago. And Maker's up 12% to $989 million fully diluted. On general stablecoin bullishness, there's a lot of stablecoin activity going on at the moment. Ledge, anything going on the NFT side we need to know?
Yep, pretty green day for NFTs as well. Before we go there, you pointed out a notable sale. Legendary collector Adam Weitzman buying a skull of Lucy for 120 ETH. Apart from that, majors are looking good, especially after they had a bit of a, I would say, bit of a slower week. Bored Apes are up 1%, 13.4 ETH floor for that. Milady's up 1%. Again, I know those are not big numbers, but we are at least moving away from the red downtrend that we've experienced over the last week or two. In terms of some other collections, which are definitely moving more, Moonbirds up another 7.5%. Good Vibes Club is up 4% on the day, up 20% over the last 7 days. Now back at a 0.92 ETH floor. So definitely a bit of a greener day for some of the NFTs. Maybe also to add to Moonbirds, the other collection, the Mythics, are also up another 18.6% and up 350% over the week now.
Market likes the Spencer takeover of Moonbirds. Just want to come to you quickly here, stats, before we get to the rest of the roundup. What was your take seeing Moonbirds getting acquired? Obviously, you had the proof history being a proof for quite some time. What do you think? Do you know Spencer very well at all?
I do know Spencer pretty well. Yeah, I mean, he's gotten very into this OCAP, the OCAP business. So Spencer runs a fund, which has done incredibly well. Largely because he's made a huge bet on pudgy penguins and very famously acquired the 3 Arrow Capital pudgy penguins, I think for like 2 to 3 ETH each or something like that. So his funds have done incredibly well, and I think oftentimes when you do well, you expand into other businesses. And I think he has a long history of liking trading cards. So he built a business creating pudgy penguins trading cards, which my kids love. I have a box of them. They ask for a pack every day. They can only get one on Sundays. But my kids love their pudgy penguin cards. So I think he probably wants to expand the IP of that card trading business into other IP, and the Moonbirds fit in there. But I've known him for a while. He's talked about wanting to buy Moonbirds for a long time and thinking that there was some brand value there. I don't know who the loyalists are. Like, I don't know who are the people who are like, yeah, I really just feel this connection to my Moonbird. If only someone better were running the IP. So I'm not sure who it's actually targeting in terms of, I think when you buy IP, what you're really buying is the collector base who feel connection to it. And I'm not sure who that is, but perhaps some folks still are in that boat. It's interesting that Yuga bought the brand and then basically it was down only and then they sold it. But if you actually look at the reason Yuga bought Proof, it was almost all for the cash. So I don't think it was really about Moonbirds in the first place. It was about the idea of getting the cash that was on Proof's balance sheet. It was basically like a down round that they could do without announcing that they did a down round. So I think it kind of all fits together at some level. I'm not as cynical about Yuga's interaction with Moonbirds as kind of first meets the eye. But those are a bunch of thoughts. We'll see what happens. I'm definitely interested in, I think one thing that NFTs like is anticipation, surprise, change. I think those are all things that tend to do well for projects. And then it's the follow through. That's the hard part. So very curious how he makes people want to buy the pixelated owls in the future.
Yeah, for sure. As you say, markets responded very, very well to this new changeover. So good luck to him. Hopefully we're going to try and get him on the show later in the week. We'll see if we're able to do that. So excited to have that conversation. Getting to the rest of the roundup to get up to speed with everything else that's been happening. Vitalik and ETH Foundation shared plans. It's got the ETH heads excited to scale ETH 10x within a 1-year time frame. So I think that is what people wanted to hear. Make the layer 1 faster and do it quicker. Robinhood announced acquisition of Bitstamp, bringing Robinhood a globally scaled crypto exchange with customers across Europe, US, and Asia. The Ethereum L2 Morph CEO Cecilia steps down with ex-Binance executive ready to take over. That's a couple of the 2 co-founders of that L2 who have both left now. So I thought that was kind of interesting to note. Tether starts to send around 26,000 Bitcoin to 21 Capital as part of its investment into the Bitcoin treasury company. Russia's largest bank, Sberbank, launched structured bonds tied to Bitcoin. And again, in the theme of all of these Bitcoin treasury companies, Norwegian Block Exchange becomes the first publicly traded Bitcoin treasury company in Norway. They just keep coming and coming. Pixelvault, in other news, this was an interesting one, begins an auction for 16 CryptoPunks, which had been owned by Punks token holders, and the current bid is at 16.8 ETH. If you can see these NFTs, these CryptoPunks, these are some really cool ones. Really, really cool set of 16 CryptoPunks. The current bid is only 16.8 ETH. It's on a website called Fractional, which is basically defunct. Like, there's no further shipping to that site. It's kind of stopped being used. It was initially created in the 2021 boom for NFTs, where people thought that it would be really interesting to fractionalize either large collections or just single NFTs into ERC20 tokens instead of just having them all sit as individual NFTs. And so there are maybe 1 billion Punks tokens, and the idea is that they're going to be able to, however much ETH this lot sells for, you'll be able to redeem those tokens for the value. So interesting to see that. Ross Ulbricht receives 30 million donation in Bitcoin to his donation wallet, and Meta shareholders reject a Bitcoin treasury proposal. 95% voted against. So that's the rest of the roundup. Ledge, what's catching your attention here before we get into the main stuff?
I think the Russian news is interesting. Sberbank has 550 billion USD in assets under management, and it's obviously interesting because then it provides investors with another way to not be as dependent on the dollar, while also in theory, obviously, being able to profit by the dollar becoming stronger. As the dollar becoming stronger would also mean that BTC compared to the Russian ruble would be stronger as well, but without having to have direct dollar exposure on the one hand. And then on the other hand, I think we've seen quite a few news recently that Russia and Russia-friendly countries have settled oil trades in BTC or in stables before. So it probably does not come as a surprise that the biggest banks, where I would assume that it is a government-aligned bank in Russia, is now pushing for structured BTC bonds as well. But I'm quite curious to see how they will make that available for Russians, because I think the initial plan with all of those things was to make it only available to qualified investors, which need a certain level of wealth to be eligible to even participate in those products. But I don't think that we have the full details on that yet. But I'm still curious to see if this is something that will only be relevant for professional accredited investors, or if that will be also pushed to be available to the broader public, just to get a feeling of how Russia will think of its crypto strategy over the next years.
Interesting. Yeah, that's interesting. I remember in the Bitcoin conference, was it last week now? Yes, last week. I think the mayor of New York was talking about Bit bonds as well. And David Bailey, who's the CEO of Bitcoin Magazine, just keeps hammering the idea as if like it's inevitable, like it's coming pretty soon. So definitely something to keep an eye on. Rahim, before we get into the main stuff, what's kind of catching your attention from the snapshot or otherwise? What are you interested in?
Yeah, I've just come to realize like all these tech companies, they don't like Bitcoin. This is something I remember Amazon, and when MicroStrategy pitched to Microsoft, we had the same reaction. It was, I think, 95% for Microsoft as well. It was 99%, I believe, for Amazon as well. And yeah, I just think like I've been thinking about this, and I wonder, and I know this is like kind of getting into like this weird sketchy zone. I wonder there's an element of this that's political behind that. Why is it that these tech companies are so against crypto? Like you have like a 95, 99% rate of like these people rejecting it. And like on paper, yes, there's like a big element of it of like, resorting it to being like volatile, or like the regulatory framework is not XYZ. But like, again, not to make this political, not to wear that like tinfoil hat, but like all of these companies have vocalized being very Democrat focused. And I wonder if like a lot of that decision comes from like there's a degree of it is political as well. But it's pretty crazy to me of how you have like these big tech companies who has such a big shareholder base that's completely against, like 99% saying no. That's a ridiculous amount of number of people having that opinion.
It's kind of interesting. I wonder how did Tesla get that through without a vote? Does Elon just get to buy the stuff without asking anyone? I'm not sure. Stats, you were at Uber for a long time. What's your view on the kind of tech landscape and maybe some of the biggest tech companies being very opposed to putting Bitcoin on the balance sheet? Maybe there's an argument. It's like, look, we're super successful anyway. We don't need to do this. Is that what it is, or is there anything else?
Yeah, I think if it's not their job to put people in Bitcoin. If they have extra cash, they can return it to shareholders, and shareholders can put it in Bitcoin. But their shareholders are invested in Facebook because they want exposure to Instagram, they want exposure to WhatsApp, and they want exposure to Facebook. And if their shareholders would rather get exposure to Bitcoin, their shareholders can buy Bitcoin. But I think it's a tech company's job to know why your shareholders own your stock. And if you have extra cash that you can put into other it's not Bitcoin. I mean, it's like how much money are they putting into Apple stock? How much are they putting in Nvidia? Other things that have gone up a lot. No, it's like if their shareholders want to buy Nvidia, they're going to buy Nvidia. And I think if you have extra cash, instead of putting in Bitcoin, you give it back to shareholders, and then the shareholders who want to buy Bitcoin can buy Bitcoin with that money. That's what dividends are for. It's like if he gives it to Raheem can go use that dividend to buy Bitcoin. And if he gives it to someone who'd rather be in a tech investment, they can do that. But I think it's basically just saying this isn't why our shareholders invest in our company. And they know their lane. Like they have an extremely successful high ROI business, which is very consistent, very low volatility, very high ROE, high ROI. And that's what they do, So I don't find it surprising. I don't find it political. If you actually look at the big shareholders of a lot of these companies, I think a lot of the big hedge fund managers, the big capital managers I wouldn't say they're all Democrats. I think a lot of the richest people in America are not. So I certainly not 95% of the big shareholders, based on my friends who are kind of big money managers and have sway in that world. I just think they know their lane, and it's not their job to take my money that I put into Facebook because I want exposure to Instagram, and buy Nvidia stock. If I want that, I buy Nvidia. Why would they do that? By the same token, why would they put it in Bitcoin? That's not why I'm there. I have money for Bitcoin, but if you have extra cash, give it back to shareholders, and they can each pick. But it's not a corporate's job to pump our asset class, even though we'd love for them to do it. And it doesn't mean they hate Bitcoin. I also want to be very clear. This does not mean that Facebook dislikes Bitcoin or dislikes crypto. It just means that they understand that like there are certain people who want that exposure and certain people who don't. And it's not their job to put that on their shareholder base.
Interesting. And yet there's still this significant
with Tesla, you just have to know how much sway does Elon have?
That's what I was wondering. How did they manage to just get it through then? Because
I just Googled it.
Probably the biggest shareholder by a long shot. And if you want something to go through, he probably has a lot more power to do so. Zuck is the biggest voter on the Facebook board, but over time that dilutes because over time the CEO wants to get more cash. Then they give up some of their voting rights. But my guess is that Zuck is like, no, I'd rather invest in my own business than invest in Bitcoin. I'd rather take my cash and put that money into Oculus, put that money into the stuff that shareholders want me to spend the money on than to buy some random asset class, which to them it is. Just like Nvidia stock is. I mean, Nvidia stock's done just as well as Bitcoin. Are we yelling at CEOs they didn't put more of their own cash in Nvidia stock? No, it's just that's just not their role. and they can do what they want with their own money. It's just weird. I think this obsession people have that everyone should take every dollar they have and put it into an extremely volatile asset class for other people.
We like the Bitcoin.
We're not saying it about NVIDIA. We're not laughing at it. Oh, you're so dumb. You didn't put your spare cash in NVIDIA. Like, no. Like, why would you? Even though it has gone up and would have been more valuable than cash on the balance sheet.
Got to entertain the maximalism sometimes, Stats. There's a bit.
Yeah, well, I'm always here to unentertain them. So that's why I'm only here on Tuesdays.
Ryan, you said you'd Googled something about the Tesla situation?
For Tesla, like apparently there was no shareholder vote, so the company board and management decided to buy it on their balance sheets. I quickly looked it up, didn't go into detail and stuff. So that's a good argument. Like there's a good chance that even if they had like a vote, maybe it wouldn't pass in Tesla. And I guess there's an argument to make that, okay, if you are in like a tech industry, which is, again, in some ways, like it's so volatile on its own that you're like, okay, which is why they're like, oh, let's buy like treasury bonds or something that's a lot more safer, going to Stats' point and stuff. So I get it. They want to be like a bit more conservative about their capital.
You're even seeing it in Republican states. Like, I mean, some of them are pushing through kind of Bitcoin treasury bills, but I think even in Wyoming, which is one of the most Republican states in America, the lawmakers are saying, like, no, it's not really our job to put taxpayer money into Bitcoin. Like, they can do that if they want. So I think this is a pretty consistent thing that you're seeing. Maybe over time that changes as if we really get to a world where people see Bitcoin like gold but my guess is that Facebook doesn't have much money in gold either.
Yeah. Right. So flipping from not putting money into Bitcoin, Ledge, going into the first headline for today, Strategy announcing their perpetual preferred shares to buy more Bitcoin. Tell us what we need to know here. That I'm very curious for the takes we're going to have, particularly from Stats after we've been. There's always a headline about this on a Tuesday, Stats, for you to sink your teeth into. So,
that's because he announces it on Monday. It's part of the routine.
It's perfect. Absolutely perfect. Ledge, what do we need to know here? It's obviously significant. So, and it does seem slightly different to what has been announced before. So tell us what we need to know.
It is slightly different. Yes. Strategy announced an initial public offering of its Stride stock. So what is happening? They are launching an initial IPO of 2.5 million preferred shares of a 10% Series A perpetual Stride preferred stock. It's going to be a couple of technical terms. I'm going to break all of them down in a second. This is a non-cumulative cash-only dividend-paying security, and it comes at a 10% dividend. Maybe just quickly the reminder that a preferred stock typically comes with a higher liquidation preference, comes without voting rights, but with a often fixed dividend, as opposed to the common stock offerings that we've seen by Strategy before, also as opposed to some of the convertible bonds that they did. In this case, it's preferred stock with a fixed 10% dividend. However, that dividend is not guaranteed unless declared. So if Strategy does not have the money or does not have the means to pay the dividend, they don't have to do that. It's also non-cumulative. So if they skip a dividend payment and they do another one later, they don't have the obligation to basically pay missed dividend payments. So it's an optional dividend in that sense. And the initial liquidation price of that will be at $100 per share. So the big difference being it's not common, it's preferred stock. It comes with a fixed 10% dividend, but this dividend has a couple clauses in there, which means it does not need to be paid necessarily. Strategy has no obligation to do so if they can't afford to pay it.
Is there any option do they have any exposure to the equity?
I think it does, yeah.
Because not all the preferred shares do actually have equity exposure.
I know. I think this one does though, but I'm not sure. Let me see if I can find info on that, because I think I read that it does. I'll check that in a second.
So, Amanda, two initial questions. Maybe, Led, you can clarify. What's the meaning of perpetual here? This is something that is ongoing. Is that Is that right? And second,
It's
where's
basically with most bonds, you will like I give you $100, you pay me $8% every year, and then you give me my 100 back after 10 years. That's why most bonds actually have an expiration or a duration. This has no duration. That they're basically saying we're just going to give these dividends forever. So there's no time where a strategy is going to come back and give you $100 for every $100 you gave me back. It's just an ongoing dividend.
Got it. Okay. Okay. So that's that. And then second question, where's the dividend coming from? That's the key question, no?
Yeah, you don't get equity exposure. I was wrong about that. Well, the dividend, where could it come from? In theory, it could come from strategy being so profitable that they can afford to pay the dividend. It could just come from the fact that BTC is going up even further and they would sell BTC, which they haven't been doing yet. Where else could it come from? If they start to engage with BTCFi, they start to do some sort of lending and earn APY on their holdings, which I think would be not the most unreasonable thing to think about.
10% though. 10%'s like quite a lot for lending. Like you can borrow against Bitcoin on Hyperliquid now for like 5%.
Yeah, but they have way more BTC than they issue in that. So if they farm with more than that, they could afford the dividend and basically like cross-finance it.
Stats, you've got to come in here. What are your thoughts?
I mean, so what they're basically saying is, I mean, look, the previous two preferred share offerings that they've put out were successful. You know, they were oversubscribed, and they use that money to go buy Bitcoin. So I think that they're just constantly thinking, how can we take the least from the shareholders in exchange for buying the most Bitcoin? And what they're saying here is, 10% dividend that we don't even have to pay if we don't want to. They're not getting any equity exposure, but we're like, so the holders get no equity exposure, so they don't really dilute the upside. Basically, all these just create more. If Bitcoin goes down or if strategy has to sell their Bitcoin, all these new entities get the money before strategy holders do. So it kind of creates a bit more risk on like in the crash scenario or in the they have to dump scenario. But it's just kind of like more creative ways. And because right now there's such a energy for these treasury companies, and strategy is the daddy of all treasury companies, and they're getting such a premium, I think they're just trying to find more and more ways to get to that like desired million Bitcoin, which I'm sure if they ever hit it, they'll just want more. But yeah, it's kind of great. I mean, the interesting thing to me is kind of what you were asking, B-Check, which is who's going to want to buy it. And to your point, like a 10% dividend isn't that bad. It's not that it's not yield on Bitcoin though. This is yield on USD. So it should be compared to other things you can do with dollars, not things you can do with Bitcoin.
And it's not guaranteed either. I think that's the important one to keep in mind.
What did you say?
I think it's also important to keep in mind that it's not guaranteed. So
it's a TMB bond, man, a trust me, bro bond. Like, I mean, it's the only thing that it's very, very similar to crypto. It's like the one downside is reputational. If they don't pay these, it'll be harder for if they don't pay the dividends. And B-Check, where does it come from? Presumably, it comes from. I mean, they're selling a little bit of Bitcoin if Bitcoin goes higher. I think that's like the main area of getting cash. And I do think in this case, if you're like, hey, we have to sell it tiny bit just to feed our preferred holders, I don't think the market would react as negatively to that as like a liquidation event, because this really isn't going to be that. This isn't going to be that big of a sale, because a 10% dividend and 2.5% per quarter is not just on the principal here isn't that much cash relative to the amount of Bitcoin they have. But it'd be interesting to see if because again with all these things, the question is, will it get oversubscribed, and do people have that trust here that they're going to get paid at the dividend? I would assume that it would be very much in Sailor's interest to pay these dividends every quarter, because if they don't, it'll be very hard for them to raise more money and do more of these kind of like creative structures. But so I
just can't imagine that tweet going out. How now he has the buy, we've just bought this much on this day and this is the yield. I can't imagine the tweet going out and we've just sold this amount to pay this amount of dividend. Like, I just can't see that one.
I mean, This isn't the first. I mean, they owe dividends to a lot of people. Like that's how they've been able to sell these preferreds. I mean, they used to just be able to do it by selling options on the stock if the stock goes higher, but
Sure.
this is in some ways less dilutive, this is less dilutive in a lot of ways because shareholders still get all the upside.
Okay.
So what do you think is the strategy here that basically every offering is somehow different? Is it just to see what the market likes most? Because it even becomes hard to compare all of the different offerings we've seen so far. And it feels, I don't know, as a market participant, say, I like the convertible bonds, I bought those, I want to have more. Then the next thing I can buy is common stock. I'm like, yeah, okay, I'm going to buy that too. And the next thing is preferred stock with a 10% fixed optional dividend. What do you think is like the thinking here that all the offerings look quite different sometimes?
I think there's a bit of trying to see what they can get away with, or that, and that sounds cynical, right? But I think that it's just figuring out the supply and demand. It's like if you are like you raise your price more and more. In his case, you give the preferred shareholders less and less, and see where there's demand over time. I think the first one they did had equity upside. So if the equity goes up a ton, then you're diluting your shareholders a lot, and you're giving up a lot. So then they're like, oh, how about we don't even give them any equity exposure, just pure fixed income, and see if they'll still buy it. And then they did buy it. So now they're doing it again, and I don't know if this is like more or less favorable than the previous one. But the other thing is like some people really just care about yield, so you're creating a straight, they don't want Bitcoin exposure necessarily because this has zero Bitcoin exposure. Be very clear. They're like, if you buy this, you get no exposure to Bitcoin. The only way you get exposure to Bitcoin is that Bitcoin has to stay relatively high for you to be guaranteed to get your 10%, but you have zero upside. So they're saying, like, who just wants 10% yields?
That's a good point, actually. Like, as you read through the actual official press release, Bitcoin is not mentioned in the sense that it's just talking about the dividend that you're going to get. Oh, so people are just they're buying 10%. You're buying 10%. And you're trusting the company to give you 10%, no matter what they choose to do.
And in doing so, you're trusting that Bitcoin's not going to tank, right? Because the case where MicroStrategy can't pay you is that Bitcoin tanks.
Yeah.
I feel like there's a level of like troubleshooting. Like he goes to like a company and they're like, oh, we like this, but we don't want that and stuff. So he comes back, hey guys, we need to kind of build like a Ponzi where, okay, these guys want EO, they don't want exposure to Bitcoin. What can we build? And that's he keeps rolling out like different options for it, like every couple of weeks.
Yeah, bunch of different options here. Let's see if this one gets taken up then.
I bet it will. My guess is that he doesn't release these without knowing that he's got the buyers.
Yeah, I think so. I think that's probably right. Okay, interesting stuff. We'll continue to monitor the variety of Bitcoin options that are getting rolled out across the board here. As you said, like we're trying to keep up with all of the treasury companies themselves. They're kind of really, the velocity of those coming out is increasing as well. So every single day this week and last week, there seemed to be another one coming from somewhere. We'll keep on top of it, but let's keep it moving for now. Getting into the next headline, which is that Hyperliquid is outperforming the other majors. It is up almost 15% to almost $38 today, $37.45, pushing back towards its all-time high, which is not so long ago. Went up to about 38, I think, or 39 at some point last week. Dipped down to 30, as low as 30. Now back up another more than 20% to get to where it is now. Maybe at least a little bit of this is in connection to the news that Binance US announced that spot trading for Hyperliquid is coming soon to Binance US specifically. So that's not including the other Binance site, but in Binance US. So there was that news. And I was curious as to what we thought the significance of that was. That was the main news. There's this little bit of moon maths here, I think, when thinking about Binance listings. This is one of the tweets Ledge I've got shared there. You have, with Hype soon trading on Binance and perps already live on Binance, a spot listing is likely to follow. There's some research on Binance spot premiums. Tokens average a 63% gain on listing, 26% median move, with 7-day sustaining at 30%. In general, spot listings on Binance recently, this is going off instinct, not data necessarily, but like it feels like you always get the move up which are never sustained, or in the last year or so, it's been very, very difficult for anything to sustain that move up. Ledge, coming to you first, and then I want to talk a little bit more separately on the Hyperliquid ecosystem. Do you think this move up is to do with this specific news? This news was announced 16 hours ago. Do you think it's to do with that? And also maybe deeper question. There's another tweet here. I was trying to find out like the bigger takes here. Obviously, there's a lot of competition between Binance and Hyperliquid and the other centralized exchanges. When there was that very long position where Hyperliquid were basically on the wrong side of, they did some little bit of magic to, in effect, not pay out necessarily what they were supposed to, change some of the positions to make sure that the HLP didn't get wrecked. And that was very much seen as like an attack from the outside when the centralized exchanges were kind of listing a specific token. I think it was Jelly at the time, in order to almost help attack it. And the question here, I think, is there anything going on here? Like, I guess people are a bit wondering, like, okay, is there anything going on? CZ had literally just written an article a couple of days ago talking about dark pools. Because obviously James Wynn has been creating these huge positions on Hyperliquid. CZ kind of coming out saying like, look, this is not good. Whereas Jeff responded and said, no, this public stuff is actually better. What's your view here, Ledge? Like, there's a few things going on. Is there anything else to keep an eye on? Or is this just a friendly competitor exchange listing their friendly competitors token?
Yeah, very interesting question. But as to what's really going on, I don't know, to be honest. Obviously, Binance has to know that even if it's only Binance US, that this will do a lot of volume. So it is a listing that they per se would like to do, I assume, on the one hand. On the other hand, as you say, it is a competitor. Obviously, Binance being the way, way bigger one when it comes to perps trading volume. I think we said Binance does like 84 bill a day. Hyperliquid does 10, 11 bill. So it's like still kind of a 8 to 9x between the two of them. If there is more to that story, or if they just list now and will come with an own announcement of an own product that they will do on top of that, I have no idea. Like the post that you had brought up, let me get it back up on stage, paints a lovely story. Hyperliquid eating Binance market share. CZ writes the tweet, as you said, forget the hype, think long term. Then we had the James Wynn trades. Then we had the CZ article on dark pool dexes. And then hype is listed on Binance US for with a spot listing. I don't know if there's more to that story, or if CT is just putting things together.
We obviously like looking for the 4D chess move, don't we? We like looking for it.
I think we love to over intellectualize things sometimes. We think that everyone else is playing like 4 to 6D chess, and sometimes it might be the case, and sometimes it just might be the case, hey, it's a token that will generate a lot of volume for Binance and make them money. I don't know which one it is in that case, though.
If that were the case, why wouldn't they list it on the Big Daddy? Why would they put it on Binance.us, which no one cares about?
So you're saying it's 4D chess then?
I don't think 4D chess is the right term. I just think that there is some there here. I mean, I remember when the
some
HLP
kind of strategy, right? Some kind of tactic,
or just a lot of different like factors. You know, it's like I still remember when I worked in Goldman Sachs research, we covered Morgan Stanley stock. You know, and sometimes we'd have a buy rating on Morgan Stanley stock. The only one we didn't cover and have ratings on was Goldman Sachs. But you know, I say, look, I'm sure like you can make a lot of money listing hype. There are a lot of trading fees to be had by listing a $37 billion token. On the flip side, they're clearly a rival. And I think to say they're not, or that they're all just friends, is like when HLP had their issue. I remember I was skiing when it happened. When HLP had like Binance went on their Twitter and started talking shit. Like, you don't talk shit about, you're not gonna be out there talking shit about Gateway.Hong Kong, you know, whatever random exchanges they don't care about. Like, they're not gonna be out there talking shit about Kraken even. They would not be doing that about these players that don't matter to them. But they were out there like talking shit about Hyperliquid. Like, there's clearly a lot of talk about Hyperliquid as the next Binance, and everyone gets talked about being the next thing. And normally you ignore it when you're the big guy, but I don't think that's what's happening here. I think there is a bit of of an overlap and a bit of just a recognition that this is a very real competitor. But at the same time, you make a lot of money by listing because of the trading fees you can get by offering that to your user base. So I think there is some there here. Is it 4D chess, or is it just a bunch of different factors to consider and you got to make a business decision? But it is interesting, like Binance.us, like who uses Binance.us versus the big kahuna, which is where they'd really move things. So I think that is interesting, but I think it's just one thing to consider in the fact that there's a lot going on here.
Yeah, and it's definitely one, to be fair, I think it is a bit of a question mark, right? Like I'm not super well versed in like the exchange politics. I think it's always been a bit of an opaque thing. Remember, we have all the debates about like how to get listed and why certain things are getting listed, and some people say you got to pay for it, some people deny that there's no payments involved. It's like it's just this big opaque thing. It's very difficult to say anything definitively. Rahim, curious for your thoughts here. I appreciate it's a little bit of speculation, but just how are you viewing this, and also maybe just hype in general as the asset? I know you're participating there. Does this make a difference to you? Does it move the needle for you? What are you thinking?
Yeah, to be honest, like I don't really think much about like this exchange game. I feel like there's, you have like exchanges, sometimes Coinbase and all these, like they'll list like the most random tokens. I feel like there's so much that goes behind it that I've just like reached the point, like unless I have like verifiable information, I'm just not gonna like speculate. It's very much similar. Like I'm not very aware of like a lot of like the politics that go on, like what exactly are the nuances of between like the Binance US and compared to the regular Binance and stuff. And at this point, yeah, like I'm like super bullish on hype. I still think it's like one of the most valuable ecosystems to kind of look at. I think especially in this landscape, because there's this whole narrative of like consumer chains everywhere else, and personally there's no consumers are not coming in, and I feel like they're focused on very much building like DeFi protocols and like a crypto centric ecosystem. So yeah, I'm definitely bullish on them. But like, to be honest, like I looked at it and I was like, dude, there's so much cabal stuff that happens with these exchanges that I'm just like, yeah, don't really have much to ponder over.
The other thing is like is power dynamics, right? Like Binance is a kingmaker for a small token. But for a token like Hype actually offers a lot to Binance, which is a lot of trading fees. Like that is, there's so many people that would be interested in buying this on Binance that the power isn't really as lopsided here. My guess is that Binance just recognized that. But I have no idea if anything happened behind the scenes in terms of an agreement. But it's who has the power in this one? Like Hype seems to be doing perfectly fine without Binance.
In fact, sometimes what happens in these situations is you've created such a group of diehard supporters and token holders that they actually like that story, that you guys won't accumulate the tokens that you need on the market to list us. Screw you, we don't need you. We're gonna do it ourselves. If anything, is kind of emboldened the holders a little bit. So yeah, I don't know. We know for sure what is happening there, but Mindless, I think we're trying to get you up. I know you might have something interesting to say on this. I don't know if you're having like connection issues, or, like we're doing our best on our side. If you can, try and connect again if you can. In the meantime, I just wanted to draw attention to like one interesting thing that's happening on Hyperliquid, which I actually think is like indicative of the culture of Hyperliquid. So I haven't necessarily seen this from anyone, to be honest. So LiquidLaunch is a token which is it's like the main launchpad on Hyperliquid. And yesterday, interestingly, they announced that they were going to give 100% of their revenue, of protocol revenue, to stakers. So they're the main token launchpad right now. I think me and Ledge chatted about it a while ago, and we both bought a bit when it was lower. We didn't know much about the team themselves. It kind of serves as a bet on there being more hype EVM activity moving forward, right? Like if you're bullish Hyperliquid, it's the main launch pad. Maybe have a little bit of that. I had no idea they were going to do something like this. But the thing that I thought was, I don't know if that happens in any other ecosystem. We're very familiar with a lot of these launchpad style protocols on Solana, for example, and maybe elsewhere too. I don't know any that have is almost in the same spirit of Hyperliquid itself, which is the team. There's that same kind of no VC culture, no we're just going to give everything back in some form, whether that's we're going to give it all to you from staking, or we're going to keep doing these token buybacks. It feels like there's something in the culture there that has created that situation, which I thought was interesting. The token pumped quite a lot on that news yesterday. Obviously, it helps that Hype is going up at that same time. So I think those two things happen at the same time. You make the announcement, the positive announcement, and Hype just seems to go up 15% on a day. Then obviously the lower Hyperliquid or the smaller Hyperliquid tokens are going to move aggressively as well. But I just thought that was interesting, Ledge. I don't know if you saw that last night. I saw it this morning. Curious for your thoughts there.
I saw it today after I saw that my bags are up 50% on that, which I was quite happy about.
Yeah, I was happy as well. We held through the dip. Yeah.
Yeah.
What does the Hyperliquid Launchpad do that the core app doesn't do?
So that's the Launchpad where it's kind of like the equivalent of a pump fund style. Like you can just create a coin, you can just get it out there. People can, you've got that bonding page where you can see, is this going to bond? Is it not going to bond? And then it's just
and do all that bond ultimately get listed on Hyperliquid?
No, the process of listing on Hyperliquid is a bit different. Like you need to buy the ticker, and the tickers are quite expensive to buy. So it's just a bit more of a formal process. It's a more expensive way. Whereas this is the way that you can just, sorry, go on then.
And the tickers get more and more expensive over time as well.
I'm not sure if they
do
do
cheaper.
anymore.
Don't they sometimes get cheaper if there's less demand? Like, isn't it a fluctuating market, or is it just up only?
I think there was a period of time when it was up only and people were paying like crazy prices for a ticker, but now I think it's a bit more variable.
Because there's a lot of spot listings on Hyperliquid now.
DeFarmer described it as pump fun plus 1 inch in one neat little package.
Yeah, because it's
what makes it native to Hyperliquid is that they're listed on like a Hyperliquid on a chain on Hyperliquid's chain. Like what makes this Launchpad native to Hyperliquid if the tokens don't ultimately get onto Hyperliquid?
So this is on Hype EVM.
Side of things.
So you've got the Hypercore, which is like the main, main website that everyone's familiar with. Then you've got the EVM side. So this is like the main Launchpad on the EVM. So yeah, pretty interesting there. Ledge, was there a final conclusion you had on that? You thought, obviously it's interesting.
I like that they pay they pay stakers in Hype, not in LiquidLaunch tokens. That's
a good point. Good point.
It's non-dilutive. I don't need to dump my LiquidLaunch staking rewards because I don't get LiquidLaunch staking rewards. I get Hype.
That's actually a really good point, which I think is actually a small movement that's taking place. I don't know whether it's this cycle or just whatever period of time we're in now. Previously, lots of staking, you'd keep getting rewards in the same asset which you were choosing to stake. That is a bad model. And I think that is actually actively being rejected now, especially for tokens which are not main tokens. It created all kinds of sell pressure, whereas now you can see these mechanics. Actually, the Laudio stay loud mechanic as well, right? You have the loud token, but all the people who were eating off fees, they were receiving those, or they're going to receive those whenever it is in a week or so. They're going to receive those fees in Sol. So that protects the token itself from increased sell pressure. And yes, as you said, LiquidLaunch, you stake your LICT tokens, and then you're earning in Hype. So very, very interesting mechanic. I do think we're going to see more of that. It looks like we've got Mindless up on stage now. Mindless, welcome to the stage again, my man. Good to have you back with us. I know you'll have something curious or interesting to say about the Binance Hyperliquid situation. So take it away, man. What are you thinking?
Hello, gents. It's been a minute. I appreciate it. Sorry, I had some connection issues. I'll try and bring a contrarian take, mixed with some of my own opinions here. Sure, yeah. I'd like to look at this not so much as a DEX, but obviously it's a layer one. So this is chain wars. This is like 2017, 2018, and then the 2020 and 2021 blockchain wars. So I'd rather compare like trading activity on chain volumes between the Hype EVM and let's say BNB and Solana for a sort of balanced view on this, as opposed to the prices of these tokens going up, therefore they must be great. My only concern is with chains that have low gas or no gas, I'm generally a bit more dubious because they can be very easy to sort of, let's say, massage the figures a little bit. We've seen that in the last cycle with Solana. I'm not sure if you're aware, with how they rehypothecated TVL like several times, quite literally multiplying it by 7 or 8 through protocols and then utilizing the TVL through another protocol. And that was a very big scam that happened previously in Solana. And we only found out like when the bear market came around that they were doing this. So I'm still suspicious. What I will say is we have to separate like bullish narratives and sentiments from like facts. You have the hype EVM and all of the hype friends and bros desperately trying to get the attention of Binance and CZ so they can get a token listing. So clearly one is more dominant than the other. Like you're requiring that token listing to get some legitimacy. I put a question mark next to that also. The other thing is it's worth just noting, like, this is crypto. These things could be like the best things in sliced bread today, and in 2 years we'll never be talking about them. I would just say, let's just relax a little bit, take part, enjoy this, and revisit in a year and see if it's still here.
Sounds like a very measured take, Mindless. Very, very responsible, very, very, very measured. I thought we were going to be putting the tinfoil hat on completely, but I appreciate the thoughts. So do you have any specific thought as to whether there's like any strategy on this specific listing at all? It sounds like it's your opinion that on the hype side, maybe they're more kind of angling for the listing. Do you think there's any strategy on the Binance side? I appreciate you thinking there's like, it's like a bigger comparison that should be made when it's like two chain activities rather than just looking at core activity. But do you think there's any strategy there?
Yeah, absolutely. So just going back in history, I still believe this. Binance is the top dog in this space. It's the apex predator. It's been around for several cycles, trillions of dollars every bull cycle. Yes, their US business has suffered a lot, but I think that's going to be reversed pretty soon this year with, I think, Trump and the SEC and the way they've navigated like getting close to the presidency. I'm pretty sure they're going to get a pardon, and you'll see Binance US back on the spotlight again, and they'll capture a large part of the US market as they did the first time. So I'm waiting for that to happen. What Binance does, and we're all aware of this, they acquire meaningful stakes in everything. Like whether it's an up-and-coming competitor, they had large stakes in FTX, they have large ownership stakes in plenty of other exchanges. They often support and prop up like seed round stages and all sorts of businesses and ventures in the space. So this is no different. Like they could just take this as a strategic allocation and something that's not quite directly competing with them, but it's a good venture for the business type of thing. Like they're a monster. You have to imagine. They've just come off the back of being banned in the US and a $4 billion fee and the CEO getting thrown in prison, and they come back like it's nothing. You know, just, yeah, put that into perspective.
Appreciate it, man. Appreciate the additional thoughts there. Always interesting to get your takes. Let's leave it there for hype today. I appreciate we're also running out of time. Just got a final headline, which I thought was interesting for you on a little bit of gold here. Rahim, what do we need to know on Tether and its gold offering?
Cool. So Tether essentially has like a stable coin backed by gold that they actually came out with, and back in 2020, which has a market cap of around $830 million. It trades around at $3,300. So each of the token represents about like 1 troy ounce, which is 31 grams of gold. So they've been in this business like for a while, where the gold is like stored in Swiss vaults, audited by like certain companies. They announced a partnership with Ton blockchain, which is basically the blockchain for Telegram users, where they can have access to this exact token ecosystem. So the token is called XAUT0. So the 0 comes from them using the layer 0 protocol, which is essentially making it like seamless for people on Telegram to use their wallets and kind of have exposure to the stablecoin backed by gold. Tether also came up with like a report, I believe in Q1, where they mentioned that they have about 7.7 tons of gold that's backed 1-to-1 through their ecosystem. And yeah, it's like something that they've been talking about a lot. Definitely real world assets has been like a big conversation in everyday space. They built this in like 2020 with the same idea of like people hedging against inflation and wanting exposure on gold. And now on Telegram, you have like everyday users who have this ability to get exposure to that ecosystem. So yeah, it's something that they've like recently rolled out, and yeah, it's been a talk of the town. Funny enough, like before I looked it up on this document today, I was out with someone from the Ton ecosystem, and they were just talking about that they have been like, they didn't mention to me exactly like the token ecosystem, but they were saying that they are very much looking to onboard a lot of people into buying stable coins backed by gold and stuff. So I had this conversation last night. So it's something that apparently they think that a lot of Telegram users might just be interested in.
Interesting. Curious. Just on a personal note, Rahim, and maybe this, we can end the show going around here. If you wanted gold exposure, is this the way you do it? My instinct with gold, and maybe this is completely, I don't know, unfair or not logical, but it's like, if you have so much crypto exposure, do I want my gold also like on chain, or do I want to have some physical stuff? I don't know if that's just like an instinctive feeling, not necessarily logical, but what's your view?
Yeah, I think like I'm pretty much in the same boat. It's like at some point you're like, how much risk do you want to have in this space? And it's not even risk on like the crypto side of it. It's also on the self-custody side of it. Like,
yeah, like where's the
every day
gold
you're
and
reading
stuff?
about, like recently I've been hearing so many people getting like their telegrams hacked, and like the
Oh,
most
yeah.
random, like your entire system. So I'm completely with you on this. Like at this point, it's like that level that, okay, even with like stable coins, how much risk do I want to have with like stable coins and stuff? And like how much risk do I want to have with something like gold being on like crypto, being on an ecosystem that I still feel like Ton is still figuring? Maybe like, okay, Tether, I would be like a lot more open to it,
I
but
think the
Ton, I
brand
still
is
feel
going to
like
help,
there's
right?
so much. Oh, for
Yeah.
sure. I think Tether definitely. I mean, like the fact that they're one of the most successful companies, not just like in crypto, but like overall in terms of like the revenue they've been making. I think that definitely adds to the legitimacy. But yeah, it's still too risky for me personally.
I'll
Stats?
take the other side there. I mean, the gold I own is in the bar ETF, which is a custody. I don't have physical gold here, and ETFs have been pretty strong performers for 20 years as far as reliability to mirror the price of gold, and for redemptions to happen for, I guess, the market makers who do that. So obviously you're taking Tether risk, which I think as an entity, Tether's interesting because I think they have a bit of a shady reputation, but they've always delivered. I don't think anyone's ever had a bad experience where Tether did not deliver what they committed to. So I think this is clever. I think, actually getting physical gold, you're not going to buy and sell physical gold over the course of a day, whereas this gives people access to one of the hottest assets in the world right now, and one that I think has some theoretical and philosophical overlap with the buyer base here. So I think this is pretty clever of them, and I think it will get used a lot. And I think both as a trading vehicle and also as a store of value vehicle.
So you have exposure through ETF. Would you see yourself having exposure through Tether for gold?
I personally have zero advantage to use it versus using BAR, which is the ETF I use. So for me, I personally, but most people are less trusting of the economic system than I am. And a lot of people in crypto, particularly Tether user base, don't have access to US stock markets.
Yeah.
And so like otherwise, anyone who has access to like a lot of vehicles would not be putting a lot of money in USDT because it gives zero yield on US dollars. Now you can do stuff with it to earn yield, but the vehicle is made for people largely who don't really have access to a lot of these kind of economic marketplaces that other people have. I personally trust Vanguard with my BAR ETF, but I'm an outlier, I think, relative to a lot of the Tether user base.
Good stuff. Final take, Ledge. Where do you sit?
Physical gold, for the reason that it's tax exempt after a year of holding it, which does not apply for ETFs. I would buy ETFs otherwise.
What's the tax reason?
Obviously, the drawback with physical gold is cost of storage. I don't store that at home. I have a vault, which is not at home, so which I have to, pay my yearly fees for. Sure. I like the product though, and I would like it especially if it has a DeFi component to it. I can, lend my gold and a bit of yield in that, borrow against it. That would be fun to do. But yeah, for tax reasons, I'm physical gold. Otherwise, I would be like Stats, plug it into the ETF, super low TER for that, very, very low cost that is. And it's just, I trust ETFs, period.
Good stuff. Yeah, that was super helpful. I'm just asking selfish questions, what you all thought, because I haven't come to a concrete conclusion myself. It's something I want to get more exposure to in general, because I've historically not. Trying to decide which way I'll go. Maybe, I don't know. Anyway, if it was helpful for me, I'm hoping that it was helpful for everyone else. We have run a little bit over today, but it was an interesting conversation as usual. Thank you so much to my co-hosts today, Legendary, Rahim, and Stats. Thank you so much for joining. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X Video, YouTube, and you can catch up with us on Apple or Spotify too. Have a wonderful day. Take care, and we will see you tomorrow. Bye-bye.